Right, well, we're looking at the Kenyan markets now, and the NSE closed a couple of points down today, ending there, and we see over there 0.41% up. In fact, earlier on it was slightly down. It's up to 4732 points, and quite a big move there. And we'll be talking about that NSE market now. And on the currency front, what happened to the shilling today? 85.9, 0.23%. Also quite a big jump there, 85.9 in the rate between the Kenya shilling and the US dollar. Now, joining us in our studios in Nairobi to give us an update on the Kenyan markets is Brenda Kithinji, who is research analyst at Standard Investment Bank. Brenda, let's just take a look firstly at the overall market. Those look like quite big movements there when one is accustomed to quite small movements on that Kenyan market. Currency weakening against the dollar for a third day. Give us the roundup there of what's happening.
Thanks for having me today. Last week we saw a lot of selling off, a lot of profit taking. We saw the market weaken a lot last week. And so I think it's just positive sentiments around most of the stocks where people have seen by gains following last week's decline, and they're willing to take them up. So that's largely what happened today. While the shilling has weakened slightly, it's really remained mostly stable and around a narrow range. So I don't think it's anything to be worried about.
Now let's look at the market there, and certainly what catches the eye, Brenda, is the National Bank of Kenya, state-controlled lender. It declined the most in more than 2 years. 2012 profit fell by more than half. The shares down 11% to 20 shillings. Quite a big drop for a bank.
Yeah, it was quite a big drop for the bank. It obviously came as a surprise to most of the investors because we saw the market react with the stock dropping more than by 10% today. So it came in as quite as a surprise for most investors. But well, I think because the one thing that largely affected the bank was an increase in operating costs. And this largely management attributed to installing a new IT platform, opening up new branches. So I think for them, these are things that will yield results in this year because those are investments that they have made in the previous year.
Yeah, and they were saying that the shares in the bank advanced 30% in 2013 before this statement. That cost really does seem high. Total interest expenses, they say 3.6 billion shillings compared with 1.38 billion shillings yesterday. And if you look at the rate at which the interest rate has fluctuated, 8.71% in November, 7.6% in January. These are quite big fluctuations. One would expect the bank perhaps to anticipate them more?
Sometimes it's a bit tricky for banks because you're holding expensive wholesale deposits, especially for a bank like National Bank where it holds expensive wholesale deposits. It's very hard to just get rid of them from your books, and especially when they're not able to reprice the loans to adjust for the expensive interest rates and the wholesale deposits. So that's really where they got hit. But I mean, largely, if you look at the general banking sector, most banks did register an increase in customer deposit costs because of the high interest rate environment. So this was not just peculiar to National Bank, but generally the banking sector. But I think in my opinion, what really hit National Bank, like I said, is the operating expenses because their cost-to-income ratio was about 75%, where the average banking sector cost-to-income ratio is about 50%. So I mean, this is something management needs to look at going forward.
That's right, and some of those things that you say they are doing, they can't just stop doing. If, for example, if they're expanding, they can't just put it on hold. So they'll have to get their ratios right. Let's look at Airtel Kenya investing 8.5 billion shillings to improve services. And of course, the communications in Kenya, if you combine new banking practices with the cell phone technology, this is clearly still going to be a growth area.
I mean, it is. Just looking at the gains that M-Pesa has made, Safaricom has made great gains in M-Pesa from innovation. So I think what Airtel wants to do is also ride on the gains that M-Pesa has made from innovation by being able to just upgrade their systems, upgrade their IT platforms to be able to accommodate all these new innovations in the market and to be able to compete effectively with Safaricom.
I see the Communication Commission of Kenya put out a report saying the total number of subscribers using mobile money services actually declined in the third quarter of last year. That sounds strange. I mean, we've become so accustomed to constant growth in mobile technology usage?
Well, really, the decline largely is because probably it's become a bit more expensive to send money through mobile money, because we've seen Safaricom increase their rates of sending slowly through last year and even through this year, and even to take care of the new 10% excise tax that the government imposed on them for sending money. So I think really that would be what I could attribute the decline in M-Pesa usage. But really, I think if you look at transactional wise, I think it's still healthy growth in terms of transactional wise, how much goes through M-Pesa.
You mentioned Safaricom. We often talk about that on the show, and of course Airtel Kenya. Is the competition genuine in the Kenyan market? Because in South Africa we have two very big, Vodacom and MTN, the two big cell phone companies, for example, and we've got Cell C as well. The view is that they're not competitive enough when it comes to fees, because people are so willing to pay.
Well, yeah, in Kenya, well, people are, it's mostly a value-added game within the communication sector in Kenya, because with Safaricom, you're already locked in with M-Pesa and so many of the other value adds that they give people. So it's very hard for you to change to Airtel. And Safaricom know that, so they're able to price their products at a premium, and people are willing to pay and stay on with the network.
So portability not as free as it should be. Then just finally, a supermarket chain, Uchumi, wanting to expand there, Brenda?
Yeah, Uchumi has been expanding. Through most of last year, they opened up a couple of new branches. We're going to see them open up new branches. They already intimated that they wanted to raise some capital through rights issue sometime in this year. I expect second half of the year. So, of course, this expansion projects are going to be positive for the retail chain, and the expansion is mostly within other East African countries, Tanzania and Uganda, which they don't have a really strong presence in.